Well, 2022 was a rough year for the stock market, and the S&P 500 alone dropped nearly 20% last year. But if you sold securities for a loss last year, it could actually be helpful when you're filing your taxes this year. So I want to bring in Ryan Losi to break this down. He's a CPA and the executive vice president of PASIC, a CPA firm in Virginia. Ryan, I'm glad that you are joining us today. You know, normally I would think that this conversation would apply to only sort of a smaller group of people, but over the pandemic, all these apps came out that made it really easy for you to invest in stocks. When I say you, I mean me. And that's when we thought the stock market couldn't get any lower, and then it just kept on tumbling. So there's probably a lot of people out there that lost money because they don't know what they're doing, like me. So let us talk about it. For the average person, what assets are subject to capital gains taxes? People might have heard that phrase before, but not known exactly what it was.
Sure. So really, it's a capital asset, which is defined in revenue code. And think of it as any property you hold with the intent as an investor, which is long-term capital appreciation. So it's not inventory or trade or business property. And generally, by the default, securities are considered capital assets, not necessarily for broker dealers, but definitely for the average person like yourself and myself.
So does crypto and like these NFTs, does that count as well? Because they're supposed to kind of operate outside of the structure, but I wonder if that counts.
Well, they're not considered a security, but in 2014, the IRS publicly came out in a notice and said that taxpayers need to treat it as property. And that's important because then you have to look at how is that property classified in the hands of the holder, the owner of that property. And for most crypto holders that have a wallet, then it's going to be treated as a capital asset in their hands, and they'll likely generate capital gains or losses when they dispose of that property as well.
Okay, so the good news, if you thought Bitcoin was going to like split or something and it didn't work out that way, the good news is when you file your taxes, it may actually be beneficial to be able to show a loss. Can you explain that?
Sure. It certainly, economically, it hurts, but for tax purposes, it can help. What you have to do is, and this is very important, is track your tax basis in the security. Many of the brokerage firms are required by tax law to do that, but many of the exchanges that hold crypto are not required to because they're not considered securities. And so the hard part is tracking your basis. Now, there's apps now, it's taken a number of years, that will help you do that when you download your transactions from a crypto wallet. But you got to track your basis, and then you compare your proceeds that you sell of the cryptocurrency, and that is either going to generate the proceeds versus the basis is going to generate either a gain or loss. And if there's a loss, you can use it against other gains, capital gains, but if your total capital losses exceed your capital gains, you're limited, married, filing joint, $3,000 a year, and it'll carry forward indefinitely. So if you can generate potentially what we call a paper loss, a large capital loss that maybe you can't use currently, but you think the market will recover, it'll be there sitting there to soak up future gains.
All right. Hey, Ryan Losi, there is a silver lining, and I really appreciate hearing it from you. Thank you.
Pleasure. Nice to be here.
This Money Watch segment has been brought to you by TaxAct. File for less and get more.